One of the amazing things about what's happened since the financial crisis is everything the Fed has done, all their predictions have been wrong. Yet all my predictions have been right with respect to what would the consequence of their policies.
Yeah.
They believed that after the QE1 was the only one that they needed. I said from the beginning that no, they would do it again and again and again, and they thought they'd be able to shrink their balance sheet and normalize rates. I said that was impossible from the beginning. I mean, they expected a different result than they got, but the results that they got were exactly what I expected. The only thing that hasn't happened yet is the market hasn't figured out where we're going. Right? That this endless money printing, that this monetary roach motel can only end in a U.S. dollar crisis. That America is going to keep on printing money until the money has no value. Right? We're going to keep on going into debt until our creditors realize that they're never going to get paid.
Yeah, and I think it's those sort of things that you say that it was the timing, and people like Steve Keen and a lot of others have got the dates and the timing wrong because nobody expected that they'd just print $1 trillion or that they'd take rates below zero. And the things that they did, if the natural forces were allowed to play out, we would have been in the situation that many predicted. But
it's not about the fact that I knew that they would do it. I just didn't know that they would get away with it, because you figure the markets would wise up, but they just haven't done that yet. But economically, the economy has not really grown. They're pretending that it has. So there has been a lot of damage that's been done as a result of this monetary policy. We just haven't had a complete collapse of the system yet. We haven't had a dollar crisis and a U.S. sovereign debt crisis, but that's coming. Yeah. I mean, that's inevitable, because that's the only way that this is going to stop. Right? We're going to keep running bigger and bigger deficits and printing more and more money until the world has had enough. And I think the breaking point is coming pretty soon.
Yeah, I think the old clean sturdy shirt in the laundry has kind of been the US, but also Australia. Like, we've had decent interest rates up until the last 12 months or so, and our central bank head was saying, we'll never go to zero, we'll never do QE. And here we are. They've announced $100 billion last week, and we're at zero. And the US is, $1 trillion deficits. And now the world is waking up, and Wall Street looks maybe a quarter at a time. But I think the reality is hitting in, as you say now, and that's going to affect the bond markets, and everything's going to get repriced.
Oh, absolutely. Look, it's going to be a monetary reset. I think the world's going to go back on the gold standard. There's no other way that this is going to end. This system is going to collapse. There hasn't been a fiat monetary system that has survived. They all succumb to the same fundamental flaw, and the world always returns to gold. The only difference between the experiment that we're running now and all the experiments with fiat currency that have failed in the past is the scale of this one. This one involves the entire world, just not one country experimenting with it. You got the whole world that have been conned into this. And it was really America that led the way, because we got everybody to go off the gold standard and to go on the dollar standard.
Yeah.
But we only were able to do that because the dollar was not only backed by gold, but redeemable on demand in gold. So holding dollars was holding gold, except it was better because you could buy U.S. treasuries with your dollars and earn interest, right? You got no interest on your gold, but you got interest on your treasuries, but you could have your gold whenever you wanted it. So the world kind of, accepted this. And then we abused it. We printed too much money. We didn't have enough gold. The world woke up and they said, hey, we want our gold. And then we defaulted because we didn't have it. The dollar dropped. We had the stagflation of the 1970s. But then the dollar stopped falling, mainly because we probably, got the OPEC nations to price oil in dollars.
Yeah.
But eventually the dollar found a floor, and the world continued to use it as its main reserve, even though it was backed by nothing. But, if you have a currency that's backed by something that's backed by nothing, then that currency is backed by nothing too. And you just can't have a global fiat system. Money has to have real value. Money has to be an actual commodity. It can't just be something, manufactured out of thin air. But that's what we have now. And so we have all this instability. We have all these imbalances. We have all these bubbles. And we don't have the type of economic growth that we would otherwise have with sound money.
In terms of the US debt, there's getting to the point now where getting back to even 2 or 3% target inflation band on this 29 trillion or whatever it is, they're struggling to even pay the interest on the debt. So for people at home that are beginners that don't maybe understand the bond market that well, can you give them like the beginner's version of how big this debt is and how hard it is to pay and why the rest of the world's losing confidence?
Well, the debt is enormous, right? I forget, maybe 28 trillion about now, but again, that's just the tip of the iceberg, right? Because that's just the funded debt where the U.S. government has sold treasuries into the market. But that's not all the debt that the U.S. government is obligated to pay. We have all sorts of unfunded contingent liabilities where the United States government has guaranteed the debts of other entities, where the United States government has guaranteed bank accounts, student loans, pensions, mortgages. So there's all sorts of debt. And then we have liabilities that the government has made to Americans, Social Security, Medicare, to government workers, pensions. None of this is funded. So all this is debt. So the real debt is well above 100 trillion. I don't even remember where it is, but it's a number that dwarfs all the assets of the United States combined, all the physical assets. So America is certainly broke. The problem is just paying the interest on the national debt. Right now, I think it's something like $400 billion a year. That's because rates are at zero. Yep. But if interest rates return to normal, maybe 4 or 5%, then it would be impossible to pay the interest, because I think the interest payments alone would exceed what the government collects in taxes.
Yeah.
Right. So you can't spend 100% of your revenue on interest. How do you fund the rest of government?
Yeah.
Right. So the only thing between America and insolvency is these artificially low interest rates.
Yeah.
That's why the Fed has them down. It's not because of COVID. It's because if they let rates go up, we can't pay. So they keep them at zero indefinitely. But eventually the bottom has to fall out of the dollar, because America's creditors just assume that we'll never default, right? Because we could just print whatever money we need. But the reality has to set in that printing money is the same as default if the money that we print doesn't buy you anything.
Yeah.
And ultimately, that's what has to happen. If we're going to keep on printing money with no end in sight, because we have no ability to legitimately repay our debt, and we're just going to keep conjuring money into existence without any products to back it up, eventually the dollar has to collapse. I mean, that's the only way it's going to end.
Yeah.
And that's the same as default. In fact, I think it's worse. I think if America actually did the right thing and restructured its debt and maybe offered to pay 20 cents on the dollar to people who own treasuries, right? So you have $1 million worth of treasuries, tear those up, we'll give you 200,000, right? I think that would be a better outcome than what we're going to get, because I think the dollar is going to lose a lot more than 80% of its purchasing power by the time those long-term bonds mature. The real losses are going to be bigger through inflation than through a more honest default.